Over 50,000 people have already connected an AI agent to their brokerage account that can buy and sell stocks without asking them first. Not a chatbot giving tips, actual trades, actual money, zero approval required. And in the last 2 months, 3 of the biggest platforms in America turned this on. Only one major broker looked at the same technology and said no, a human checks every single trade. This video is about why that split just became the most important decision in investing. Let's go one at a time, because the coverage on this has been scattered and the differences actually matter. Robinhood launched agentic trading in beta in late May. It lets you connect a third-party AI model, Claude, ChatGPT, whatever you choose, through Robinhood's own connection protocol, into a dedicated brokerage account, and once it's connected, that AI can place real stock and options trades without you clicking approve on each one. Robinhood said over 50,000 customers opened one of these agentic accounts within the first few weeks, with daily trading volume in the millions. Coinbase went further, faster. Their agent payment system started enabling autonomous trading back in April, and by their system update event in June, they reported AI agents had already generated millions of dollars in revenue for users through independent agent platforms built on top of their infrastructure. And eToro rolled out something called agent portfolios in March. You connect an agent to its own scoped sub-portfolio with a limited API key, put in a minimum of $200, and it trades stocks, crypto, commodities, and forex on its own. eToro says that system has already executed over 500,000 trades. Here's the part most coverage skipped, because it's less exciting than AI trades your stocks now. Interactive brokers looked at the exact same opportunity and built something deliberately different. Their AI tool will research stocks, pull real-time market data, flag opportunities, everything the autonomous versions do on the analysis side. But it will not place a single trade without you personally approving it, every time. They call it human in the middle, and it's not a technical limitation. Interactive Brokers has the engineering capability to go fully autonomous, they chose not to. Schwab and the Trade Desk are even further back, their AI tools right now only answer questions and summarize your portfolio. No trade recommendations, no execution, autonomous or otherwise. Schwab has said a broader rollout is coming later this year, and how much autonomy they build in is still an open decision, not a done one. This isn't random. It's the exact same liability question this channel covered with Coinbase registered AI advisor, who legally eats the loss when the AI is wrong, except now it's not one company's edge case, it's a live design decision playing out differently across an entire industry, in real time, with no regulator having settled it yet. Platforms racing to launch autonomous trading are making a bet that user demand for, let it just handle this, outweighs the risk of being the company whose AI made a costly mistake with nobody in the loop to catch it. Interactive Brokers made the opposite bet, that in a still unregulated space, keeping a human as the last checkpoint is worth losing some of the fully automated marketing appeal. Neither bet is obviously right yet, we're maybe 6 months into this being possible at scale, nowhere near long enough to see how it plays out through an actual bad month in the market. If you're weighing whether to connect an AI agent to your own brokerage account, the platform split above is actually a useful filter, not just trivia. Ask yourself the same question Interactive Brokers asked itself: do you want speed, or do you want a checkpoint? If you go autonomous, Robinhood, Coinbase, eToro's agent products, you are explicitly trading away the "wait, are you sure" moment, and every one of those platforms' terms puts the outcome of that trade-off on you, not them. That's not a hidden gotcha, it's stated up front. You're choosing it. If that trade-off makes you uneasy, that's exactly the instinct Interactive Brokers built its whole product around, same AI-driven research, but the click is still yours. Practically, start with the smallest allocation the platform allows, whichever model you pick, read the actual scope of what permissions you're granting before you connect anything, and revisit that decision after you've seen it operate through at least one volatile week, not just a calm one. 6 months ago, AI trades your portfolio for you, was a hypothetical this channel covered as one company's regulatory gray area. It is now alive, split decision being made differently by every major brokerage in the country, with 50,000 people already inside the autonomous version and a 500,000 trade track record accumulating in real time. The technology arrived fast enough that the industry didn't even reach consensus on the basic question, should a human still get the final click, before millions of dollars started moving through the answer. If you're using any of these, Robinhood, Coinbase, eToro, Interactive Brokers, or something newer, comment which one and whether you went autonomous or kept approval on. I'm tracking real answers for a follow-up on how this split actually holds up once we're further into it. Subscribe if you want the next update before the rest of your feed has it.